Good morning, traders. Steve Gans here, and welcome to the weekend update for November 24th. So you'll notice that my chart doesn't have my drawings on it. I don't know why that is. I honestly don't know where they went. And I was going to start drawing them back in, but then I thought, you know what? It might be a good exercise to do what I call my technical drawings here as part of the weekend update. So I'm not going to go in and draw in everything, but I do want people to kind of look at the main process of what this is and how I do it. Now I'm using the free version of TradingView here, so ads pop up from time to time. I do my actual charting in my software platform. I happen to use Thinkorswim, but again, this is a good generic, I say generic, that's probably not the right term because it's a good powerful charting program. But I am in day bars for the S&P 500. I'm going to enlarge this a little bit because I'm really going to pay attention more so to the past few months. But if I wanted to, I could come in here and I could certainly draw a much larger, which I'll do first, trend line. And that is a long time, trend line where maybe what you're looking for is like 3, 4, 5 spots that might kind of generally coincide, okay? So that doesn't mean that there's not going to be some things that will pop out at certain places. And then I like to take this because I do believe that we're in more of a channel, and I am going to create a copy of this and then paste that line, and then I can move that line like this, and we can see that it largely creates a channel. Now I can also use one of these tools over here and just draw a channel. That's another way of doing that. So this gives me kind of a general big picture look at the market and what the market is doing. Then I like to come in and look a little more granularly at recent time periods. So now I can sort of zoom in on this a little bit, and then I'll come and I'll look at like these points here seem to somewhat be creating a little bit of an upward trending triangle. In other words, our markets seem to be maybe accelerating a little bit to the upside here recently. So again, I can come in and generally connect these different points in time. And again, this is kind of there's no real magic to this other than you're just trying to connect points that other people might also connect, because at the end of the day, this is all a big psychology game. When people see pullbacks to certain points of support, certain points of resistance, etc., that's what tends to turn the market at different times. Now, there is a way that I can change this color. I don't remember exact. Here we go. Yep. So I'll make that one red. And then I will also put in a couple horizontal lines here at various points, which this is a perfect example here. We can see here, and if I hold down the shift key, this goes to a flat line. We can see that this had been, get back my shift key here, this had been prior resistance here, blew through, then it became support, came back to support, came back to support. Now I can make this line a different color. A lot of times I tend to do these more in like a yellow. Just for me, that kind of means, or even a greenish hue, that kind of means a go line, if you will. In other words, if we pull back to this point, that may be a point that we're going to reverse and head higher again. Then I can also make a copy of this one, and we get kind of the same effect here. So this had been resistance, we came back up to it, resistance, then we pop through it. Now that resistance line becomes support. And then, of course, our ultimate resistance line right now is the all-time high, which is, let me figure out which one I'm moving here. Here we go. Which is this up here is our prior all-time high. Now, the combination of this uptrending red line and this all-time high is creating what's called a wedge pattern. And we had a wedge pattern here if we took the red line and then we took this line. And when we pop out of a wedge, sometimes we get a little bit of a run. And when we get up to the top of this again, What I'm suspecting is we might get a little bit of a pullback, maybe to this red line, and then we'll come back up here to the yellow line or the greenish line. And then my expectation right now is that we may pop through this again. In many years, you get what's called the Santa Claus rally, which is a rally that occurs between Thanksgiving and the New Year. And it's not uncommon for that to occur more often than not. With AI now, you can go out and you can ask questions like that. I didn't happen to do this one here because I kind of know those answers. I know that it tends to be a thing. The only thing that might put that in question is we've already had a pretty massive run here over the past few months. So does that mean there's still enough left in here for a Santa Claus rally? Not 100% certain on that one. But again, my expectations are to be somewhat bullish in nature still, guarded bullish. But if we come down and we break this red uptrending line, and or if we break this yellow line to the downside, then, I think we could be looking at a pullback here to this 5,700 range. But my expectation right now is 65%. We're not going to break at least this yellow line. Maybe we'll go in a channel here sideways, but more often than not, I'm leaning toward being up in this area, possibly all new highs within a couple of weeks. So that's the S&P, and we can see that our volume, our up volume, is holding up pretty well here. We're getting pretty nice volume still on these up days. Now let's take a look at Volatility Index, the VIX. Another thing we see here that leads toward a kind of a bullish reading is that while VIX was elevated when we had a slight pullback here a couple days ago, VIX is back down now almost to all-time recent lows. So when there's not volatility in the markets, volatility is a sign of fear in the markets. People are buying insurance, buying protection against their long-term portfolios. When they do that, this volatility index increases. The fact that it has pulled back here is basically telling us there's not a lot of fear in the market. There's not a lot of people buying insurance on their portfolios right now. Therefore, the general fear in the market right now is pretty low, which more often than not tends to be a bullish sign as well. And then we can take a look. I also like to look at the Russell Index, the Russell 2000, and we can see that it also is approaching all new, I say all new highs. That's not quite true. If we really zoom out here, we can see our Russell was all-time highs back in 2021 here. So that's when it really peaked. But we're starting to push on those peaks right now. Now, another thing you may notice here, this is a very large, what's called cup pattern, where you have a dip, chop sideways for a long time, climbing back up. Many times you'll end up with what's called a handle now, where we might chop sideways in a range here for maybe a couple weeks or so. And then a cup and handle pattern is a bullish pattern. So you could pop out of the top of this pattern and get another big run in. So right now, that's kind of what I'm expecting here in the Russell small caps, is that we're going to chop sideways here, possibly between this 2450 and maybe 2400, maybe even down to 2300 range. So a little bit of a sideways chop for a period of time, and then an upside breakout is what I would tend to look at right now in the Russell. Again, this is all barring any, unusual or unexpected news that might come out that might spook the markets. So, kind of my summary on the weekend update from a standpoint of what I would think of the markets going forward at this time. So, thanks for joining, everyone. Take care.